Hi all, this is Ashish Kyal here. Welcome to Elliott Web News channel by Way Strategy Advisors, and we meet again on this Friday at 4 p.m. It has been a very important week where prices have been all over the places. The dual whammy of curbing the black money along with the US presidential election outcome, which was actually a shocker for the global markets, resulted into a very sharp decline on Indian markets as well. So there was a very sharp gap down opening just 2 days back, where Nifty opened around 8,005 level, and equally faster retracement was seen on the upside, where from 8,000 within just a day's time we saw the level of 8,600. So this was like a chaotic movement where there was such a sharp fall and then a sharp rise, and majority of the traders and analysts might be definitely stuck across. I mean, whether you are long on the markets or we are short on the markets, uh, either of the positions will be stuck because such kind of movement gives very less responsive time, and it is exactly during such scenarios that one need to have a very strong risk management and a money management strategy. The problem that happened just 2 days back on 8th, when the markets open drastically lower, on 9th, sorry, when markets open drastically lower, that even if you had a stop loss, you would not be able to exit at those stops because there was a huge gap down opening of nearly 500 points on Nifty. And at that point of time, I mean, practically anyone will get freeze in case you are trading in futures. And but fortunately, there was a pullback on the upside. At the same time, the pullback was so strong and so sharp that it was sufficient in order to create the emotion of greed in anyone. So the person who was probably long at around 8,400, 500 levels, when he saw markets again moving back towards 8,600, he would probably hold on to the positions, expecting that there is a possibility of a positive breakout. At the same time, someone who was short at the level of around 8,200, when Nifty was probably fluctuating for some time after a gap down opening, he would not be able to cover the short positions because he was not sure what's happening, and he, as soon as market touched 8,550, he might have started squaring off. So that led to a short squeeze on the upside, and that was the short squeeze is the right word, which resulted into a sharp move on the upside over the past 1.5 days. In today's session, again, there was a gap down opening of around more than 100 points on Nifty. And after the initial sideways action, price started giving up during the second half of the session, and we clearly saw how sharp and fast the move was on the downside in the second half also. So such kind of sharp up move and down move is sufficient for anyone to probably be out of the market if you are not following a prudent money management strategy. So risk management is one thing where you have a stop loss, but because of such gaps, it didn't get triggered. So the money management strategy is such that in case you are trading with a specific XYZ amount, you need to have at least, you should not risk more than 3% of that on any given point of time. So if you don't have a prudent money management strategy, this kind of movement is sufficient enough for you to be out of the market for rest of the life. So that's the bottom line, which the market will probably might have probably taught you in this one week. Now it's I think let us try to look at the charts and try to understand what is happening around, and what way we are into. So if you look at this chart, which I am showing you right now, this is of the Nifty. Over here, one very important observation is that it seems that markets are probably moving in an expanding pattern after it formed a very important top around 8960 levels in early September. So after forming a very important top in this zone, the entire move on the downside, if you check, has been in a running expanding pattern. Running expanding pattern is a very tricky and challenging pattern because prices breaks the low on the downside just to go down and again reverses back on the upside. At the same time, it goes up, but it doesn't break the trend line and again goes down. So it has been a very challenging pattern. Nevertheless, the last final touch for this pattern completion was given on the event, where we saw some serious sell-off from the highs, and this last leg was probably completed the entire expanding pattern. So after this completion, we saw a faster retracement on the upside of the last falling segment, which indicates that there is some pattern which is complete at this low of around 8,000 levels, and another pattern has started on the upside. It is so far not clear which pattern is ongoing, because this entire up move was wave A. What we are currently seeing is wave B, and there is no indication that wave B is complete yet. We need to wait and watch, because wave B can go further down from here to complete at 61.8%, or it can go down to complete at 76.4%. So there is no indication as of now where this wave B is going to go, and depending on the size of wave B, we will be able to gauge how much wave C on the upside can be coming. Also, a lot of post pattern integration will come into place once we understand the formation of this wave B. So this, after completing an important low at 8,000, again the entire move on the upside till 8,600 was wave A. What we are seeing right now is probably wave B, which should be completing somewhere around this zone. Maybe 8,150 to 8,250 can be the zone where wave B should get completed, and then we should start seeing wave C on the upside. Uh, Also, the reason I'm not expecting a serious sell off below the 8,000 mark is based on the fact that we already have a time cycle low in place. I think 8,000 is going to be a very important low. At the same time, there is a Gann time cycle which is already due. So there is a high possibility we might start seeing some kind of a base formation again, and price can start showing some kind of a pullback. Nevertheless, when we have such high movement on the upside, more than 500-600 points in a single day, and then again a move on the downside of more than 250 points in single day, that normally indicates a sense of confusion, because half of the people will be bullish, half will be bearish, and net the markets are not going to take you anywhere. So there is a possibility we might end up forming a triangle pattern where the volatility is going to reduce. The buyers of the options, whether it is call or put buyers, are going to be killed again, because volatility, once it starts reducing, the option prices will drastically come down. The sellers of the options are already out of the market given the volatility between 8,000 to 8,600. So what is happening right now is the market is trying to get everyone out of the current zone. So once everyone is out, then the next trending move should start. And during such sideways action, I think the best method that is going to work is again the Bollinger Bands. So what you can see on the chart is Bollinger Bands applied very prudently. So these Bollinger Bands have expanded way too much. I mean, it was contracting earlier, and we can clearly see such huge expansion. It normally expands and then again contracts. So we can see a huge expansion in Bollinger Band. There is a possibility we should start seeing contraction very soon. And when that happens, we will get a very good support and resistance levels. For now, the support will be coming around 8,200 to 8,250 for Nifty. The resistance is way far away, again towards the zone of 8,600 to 650 as per Bollinger Bands. So over next few days, this band should contract, the range should subside, we should start getting some kind of a consolidation move. Do not be surprised to again see a sharp move on upside and again a fall on the downside, because that is the nature of market when it doesn't move anywhere. And after that few days, the clarity will be there. So anyone who is probably stuck with the long positions should use, I think, 8,200 as a very strict stop loss, because if 8,200 is broken, we don't know whether it can go towards 8,100, it will stop there, or it can stop at 8,150. So 8,200 for long position looks ideal, still 100 points away, but that looks ideal. I think that can be protected. On the upside, if you are short, then 8,500, 8,550 is going to be an important resistance. So one should adopt the trading strategy for trading in a range 8,500 to 550 as a resistance, 8,200 as an important support. So these two range should slowly and steadily reduce once the volatility subsides. Also, an important thing is the black trend line which you are seeing on the upside has been protected for many weeks now. So this trend line is exactly where price reached and again retraced back on the downside. So as long as we do not see a breach about this trend line, I'm not sure what is going to happen. And at the same time, the bigger degree counts which we are shown in the daily research report, we have completed wave D and we should be coming out in the form of wave E. So currently wave E of a bigger degree is ongoing. For those bigger degree counts and the internal counts that we are seeing right now from the start of the entire expanding pattern, you can always refer our daily research report, the financial wave short-term update, where we have very clearly shown what are the range, what are the crucial levels one should observe, and what should be the trading strategy. So it is based on a very lot of technical analysis you can find in that report, and I think this actually summarizes what is happening around. So a sharp up and a sharp down, markets might move in a range for a few days and consolidate in order to find out the direction, but eventually the time cycles are bottoming out or it's in reversing, so we might start seeing some upward pressure. So let us see how next few days behave, and stay in touch. You can visit our website wavesstrategy.com for more information, and for any queries you can always write to me at Ashish Kyal at wavestrategy.com, or you can also write to us at helpdesk@wavestrategy.com, and please post if you have queries on our discussion forum at wavestrategy.com. I think that should be it from now, and thanks again for your time. See you again next week, and let's see where the markets are headed, and if it indeed consolidates within the zone and the crucial levels will be definitely mentioned in the research report. Stay tuned. Thank you.